So if you have been doing everything right financially and still feel stuck, it's probably not you. Banks have been ranking customers differently even than they did 5 years ago. And a lot of people don't realize the rules have changed. It doesn't matter what financial tactic or strategy you take, investment opportunity, business model that gets promoted to you, or how hard you work at work. If your money is not being optimized in the place that you're storing it, then you'll never turn riches into real wealth. We need to be smart about our banking relationships because every single dollar that we operate at some point in time funnels through it. So we need to optimize how we spend, how we manage our cash flow, how we earn, and how we leverage our cash flow management to get the bank to give us more resources to go out and accumulate more wealth. That's why we're going to master relationship banking. That's why we're going to make those relationships profitable, and we're going to leverage those relationships to increase our net worth. So let's talk about the shift. The shift is that banks are under pressure right now. It's gone under the radar in the media, but banks are still under a lot of pressure. And this is beyond the bank collapses we saw in 2023, 2024. There's still a lot of pressure in the banking system. So you may be asking yourself, what do those pressure points look like? What I have down here right now is AI automation. This is a gift for banks. It does help them optimize, but it is making a shift in the landscape in banking for sure. Tighter margins. A lot of us aren't thinking about the fact that banks are still dealing with what they consider a high interest rate environment compared to where they've been the previous 15 or so years since the 2008 crisis. Very important to keep that in mind. Economic volatility. We've had very unstable times since 2020. I know you've been living through it, but banks as entities and institutions have been suffering through the same economic conditions, and it has impacted them heavily, just like it's impacted you and I. So banks are under a lot of pressure right now, and this is forcing them to optimize, and that's where this is going to get interesting. So they're reducing risk exposure and increasing relationship value. They're reducing risk exposure and increasing relationship value. Let's break down what that means. When the system gets more automated, banks rely less on single scores and more on patterns. You're going to hear me talk about behaviors and patterns a lot. So why have credit scores lost power so much in the last 5 years or so? This is what it means. And it doesn't mean credit scores are dismissed, but they've diminished greatly in their capacity to help banks filter through or assess client worthiness. Credit scores equal historical behavior. They're backwards looking. We know that already, which is a decent indicator. Obviously, all of us socially use the same thing. If somebody introduces person A introduces person B to you, and person B you find out person B has a certain reputation historically, you're going to be leery of that person in today's time. So nothing is wrong with that, but it is one lagging indicator. Cash flow. Banks care more now about what? Cash flow, deposit behavior, stability signals, product engagement. These are going to be 4 pillars that banks are paying close attention to, that is backing up, supporting, and even in some cases, outranking credit scores, because everything I just named is more of a present and potential future indicator of behavior and patterns. So a credit score tells a bank who you were. Your behavior tells them who you are now. That's the best way I can sum that up for you. So let's talk about the new hidden ranking system that banks are using. You've heard a little bit about internal scores. Navy Federal is not the only one by far. As a matter of fact, larger private institutions probably have even more intricate systems than Navy Federal has the capacity to put together. So internal scores, relationship tiers, silent segments. A lot of you don't even know about this unless you've been watching my channel. Silent segments. 2 customers in the same score, very different access. That's what these things mean. Based on those points, internal scores, relationship tiers, silent segments, you can have 2 clients, 760 scores, pristine, polished. One is navigating that relationship structurally with integrity and strategy. The other, aimless, all over the place. 2 different outcomes. What does the access difference look like? Difference in limits, difference in rates, difference in offers, difference in flexibility. These are essential. When I'm applying for credit, I want the maximum exposure and limits. so I can hopefully be smart enough to leverage that access to go out and do something more productive with the money. I need the best rates and terms, so I'm not out chasing returns. If the bank is charging me 15% and I could have qualified for 10, totally changes my investment strategy. If I'm going out and buy a piece of real estate with that money, now I needed to do that much more in overall total return than if I had gotten it at a cheaper rate. Offers, I need to know what's available to me, even when I'm not looking. And if you're not navigating those relationships effectively, banks go rogue on you. They go in the dark, they go silent. They're not going to be promoting and popping up and advertising on these opportunities to borrow capital or other financial tools and resources. We want offers. It's a healthy indicator the bank wants to engage with you. We always want to see offers. Flexibility, same thing. If I'm borrowing capital, if I'm in a financial bind in a crisis situation, I need to have established a relationship with that bank that they take a more supportive approach than a precautionary approach. Very important and a distinctive difference. Banks don't deny access. They just quietly limit it. Very important. Keep that in mind. So why does this matter now? What does AI mean? Fewer stable jobs. What does fewer stable jobs mean? A disturbance in income. Banks rely extremely heavily on income. It's very important. AI, fewer jobs. Inflation, savers or losers. Inflation means savers or losers. You're saving in cash beyond what it takes to maximize that relationship at that bank. If you work with me one-to-one, I would tell you, based on this bank, keep this much in balances with them because it shows reserves, it shows a healthy cushion, and it's going to help you maximize your tier level with that financial institution. Outside of achieving that and getting an okay flat rate on that money, you need to be putting the rest of your money to work, because inflation is eroding the value of your cash that you're storing in. It's completely chipping away at it. The $20,000 you parked in the bank in 5 years is only going to buy you $13,000 worth of stuff. That's not what we want financially. Volatility equals lenders get picky. I talked about this 2023, 2024. When things get really leery, shaky, or unpredictable, the first thing banks are going to do is lean on the clients that look the most familiar and stable. This is why the wealth gap gets impacted the way it does. It's not necessarily systemic, evil in it. It's really a process of the people who happen to have the wealth, the assets, the resources, the extended relationships. These are going to be the ones the banks immediately say, we don't know what's going on out here. We can't take that level of chance with these other clients. So now we have to keep lending. We have to keep making money. We have to put more in the hands of those that we're most familiar with. It happens a lot of times to be wealthier people. So important to understand, unstable economies, banks don't reward effort. They reward structure. Write it down, get it tattooed. I don't care what you got to do. They don't reward effort. They reward structure. They're looking for operators. They're looking for people who are going to take the resources they provide them and be fruitful and multiply with them. Take that as you wish. What people get wrong: just increase my credit score, give me the results I'm looking for. Wrong answer. Pay everything off. Wrong answer. Banks don't matter anymore. Have you lost your mind? Have you lost your mind? Banks are as important now as they've ever been. And if you don't believe me, go do your research on the statistical relationships between the wealthy and financial institutions and financial professionals. I did a video on that. I've done a couple videos over the years, but I've done one not that long ago talking about how financial people who are well off, we're talking about top 5, top 1%, over 85% of them work with financial professionals, AKA financial institutions. They have direct open partnerships with these entities. It's poor people and working class that are under 30% that work with financial professionals. It's the other way around. Banks are as relevant as they've ever been. And that includes against fintechs, by the way. So people are optimizing for approvals when banks are optimizing for predictability. This is why it's so important to get away from the hack-related content and the hack-related strategies. Some of it is cool, some of it is useful, but a lot of it is going to get you short-term progress at the expense of long-term success. Banks are optimizing for predictability while you're optimizing for approvals. So you're worrying about the next card. Banks are worrying about the next 5 to 10 years. You need to get on the same page. So this is going to be crucial. It's going to be crucial. Over the next videos, I'm going to be breaking down how specific banks actually rank customers, starting with major institutions you already use. We're going to be covering products, programs, behaviors, blind spots. I've already started this series, believe it or not. If you're just jumping in, you're getting in on the early innings. But for those of you who've been tuning in, my true pioneers, you already know I kind of been teasing at this for a few videos now. We're about to dive into these institutions one by one and pull out all the value that we can find in these relationships. Once you understand how banks think, the game changes. That's it. Point blank, period. Get in the comment section down below and let me know, have you noticed any shifts in how your bank's been dealing with you, what they've been offering you, what's been available to you? If you're in a positive position with the bank, comment down below. Maybe let us know the institution and signs and signals you see that bank is comfortable with you. If you're on the other end and you looked around and now that you watched this video, you notice like, dang, I haven't had my bank promote anything to me in a while. I haven't even checked for my promotions at my bank. Comment down below. We need to keep talking about this because your true opportunity and ability to build wealth is going to be extremely dependent on healthy banking relationships. And with technology and the volatility going on, banking relationships are going to be more important than ever. So all my pioneers, welcome back. To my new viewers, welcome in. Like, comment, share, subscribe, support the channel so the channel can continue to support you. Get in the description section down below. Time with me on Instagram and TikTok. Also, for those of you who happen to be new and have stayed out this long in the video, I'm a career banker and financial services professional by trade, 14 plus years in the industry. I have a mortgage loan originator's license, life insurance license, FINRA investment license, and I'm a small business banker as well. I had a client relationship book of 25 million in deposits, even more than that in investments. And I also do extensive levels of lending relationships. So you're getting this content from somebody who's bringing this type of strategy and clarity to my consumer and small business clients on a daily basis, helping them to grow and expand their wealth and build their financial legacy. And I'm bringing it to you on this channel. So other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.